Welcome, Matthew Grant here, and if this is the first time you've joined us, well, we are delighted to have you listening in, and if you have returned having listened to previous episodes, well, it's fantastic that you've chosen to come back for more. Now, we are seeing a trend of founders at InsTech London that have been successful because they have developed business propositions to fill a very specific need, and then they've built out some clever technology. And in the last few years, many of those companies have been successfully signing up clients and partners. Well, Evan Glassman is one of those people. Prior to co-founding New Paradigm, he was an insurance agent. But when he couldn't find the cover he needed to give his clients full protection from hurricane loss, he got together with Bradley Meyer and they co-founded New Paradigm Re to offer parametric insurance. Now, they were one of the first companies that was launched to offer parametric insurance as a core of what they do. Simple idea, an elegant solution, and like many of our guests, they have built robust and often unique technology at the heart of what they are doing. But whereas most companies only need to build digital solutions, New Paradigm also had to build its own physical technology, which requires 3 large trucks to shift and install. You'll hear more about that in a moment. Now, as always, lots here for everyone, whether you are building a company yourself, working at an insurer, looking for who to partner with, looking at investments, or just want some inspirational innovation. So plug in, lie back, work out, or whatever else takes your fancy, and join Evan and I for the next 30 minutes. Evan, great to have you on board. You fall into the category of what I actually just described earlier on today for the first time as mature tech, meaning you've been around for longer than the whole insurtech world, but you've got a business, you've got clients, you're making money, and you're in a very exciting new area that we're going to hear a lot more about. So you're one of the co-founders for New Paradigm Underwriters. I noticed on the website or on your LinkedIn profile, you describe yourself as what others exclude. We're going to learn a bit more about that in a minute. But I'd also, I think, describe you as one of the truly tech-enabled MGAs because your tech is so much at the heart of what you do. So again, looking forward to hearing more about that. First of all, great to have you on board. And looks like the sun is shining with you in Miami.
Yeah, it's a nice day here today. And thanks for having me. I appreciate it, Matt.
One of the things you're offering is Parametric supplemental hurricane insurance. I know you've also got a product called Shake and Pay. But for those people who aren't familiar with what Parametric is, we like to see if people can come up with an elegant way of describing it. So how would you describe parametric insurance?
Parametric insurance comes from the word parameter. So it's parameters around various events. New Paradigm focuses on natural catastrophes, hurricanes, and earthquakes. And that's what parametric insurance is. It's triggered by the independent event parameters.
So you founded back in 2013. Hurricanes as a loss-causing event are well known in the US. Insurance has generally covered that. So why do people need to have parametric insurance for hurricane?
Most purchases of insurance are because people are required to, and it's very cost-sensitive, the way that the industry has evolved. And the insurance really attaches excess of a pretty significant layer of the most likely losses. And that's by design generally to financially insulate the insurers from all but the most extreme losses in hurricanes and earthquakes.
Okay, so people coming to you, they're looking for some kind of, sounds like a kind of top-up cover or protection on their deductibles.
So most people think of it as deductibles. And if you're catastrophe exposed, they're very meaningful. They're generally a percentage of the total value insured. So it could be 2%, 3%, 5%, 10% or more. But that's only one part of the problem. The other part of the problem are all of the exposures to economic loss that insureds have that, one, aren't insured, and two, don't count towards the accumulation of that deductible liability. We like to think of it in total cost of risk, all of the exposures that are difficult to impossible to insure traditionally. As painful as it is, and Exhibit A on that is what a lot of organizations are unfortunately going through right now around not having business interruption cover on their policies because the insurer doesn't deem there's physical damage. So the economic losses can be significantly broader than what's traditionally insured or insurable.
Yeah, big lesson from last year. So there are people out there buying this product. You started the business in 2013. I mean, what was it that gave you and Brad the motivation to start the business up?
I was a retail insurance agent in the middle market in South Florida. My personal client base at the time were resort hotels and high-rise condominiums that go up and down the coastline down here in South Florida. The products that the insurance industry was providing at that time, they really weren't fully addressing what's going to actually happen to my clients or consumers in general when the hurricane comes. So I started researching the problem, started researching reinsurance and the capital markets coming into reinsurance, reached out to RMS when I found some technology to measure hurricane force winds. We had them produce what's called a hazard analysis. And when that came back and realized that this would work and it's a scalable global business, I approached my business partner, Brad Meyer, with the idea to form the company. Brad, in his previous life, founded and built from scratch what's now the largest homeowners insurance company in Florida, and they're top 15 nationally. So he was in the process of trying to slow down and take a break when I approached him with the idea for New Paradigm back in early 2013.
I remember it well because I was at RMS at the time. I remember one of the challenges was that for parametric triggers for hurricane, the sort of traditional, conventional wind speed recorders were failing when you actually had catastrophic wind speeds. It was one of the challenges you had, wasn't it, in terms of designing the structures?
Yeah, there was a real lack of data. So one of the things that makes New Paradigm unique, and really the rubber meets the road with the trigger design for Parametric. It's quite frankly the difference between the product working or not working. So our mantra is to make sure we have as robust of a triggering methodology as possible. But the genesis of the technology, and these are what's called hurricane hardened anemometers, was following 2004 and 2005 when 8 hurricanes made landfall in the state of Florida. It was recognized that there was a real lack of data around the wind speeds that hurricanes produce over land. The anemometers at airports, at TV stations, they're not designed to reliably operate in those extreme conditions, and oftentimes they would just fail. So it was actually your former company, RMS, who's one of our platform partners, and a Bermudian reinsurer that collaborated with a meteorological data company called Weatherflow to create this technology that, to reliably operate and record, the most extreme hurricane force winds. The technology's been around now for over a decade. It's everything has worked 100% of the time so far, and we're capturing a lot of really good data around hurricanes.
Yeah, that's a really interesting story. And I guess the other thing that differentiates you back then, I think still does to a certain extent. I mean, that day there were parametric triggers for the large value cat bonds or ILS markets, but you given your background, were coming in looking at it slightly differently, weren't you? So I think your clients then, and probably still today, are slightly different than the original sort of cat bonds for alternatives to reinsurance and retrocession.
A large portion of our business is insurance companies, reinsurance companies, and ILS investors that use our parametric platform to hedge their own exposures. We also have the ability to offer very small limit, very small premium policies. So it's opening up a very large universe and to efficiently be able to do that. It's not like, when you do a cat bond with the structuring on that, that's a pretty significant endeavor. We've standardized a lot of it and built it to scale.
I just want to come back to your point before about the anemometers. I hope I've said that correctly. Is that right? I'm not going to try and repeat that.
Anemometer.
I'll let you say it. I'm not going to try it again. But it's really interesting because you've built a product, literally a physical product, to enable a financial product. But can you just talk a bit more about those? Yeah, I'm an engineer by background. I'm quite intrigued by how these things work. And I think it helps if people can visualize what you've done with Weatherflow.
Most of them are on steel reinforced concrete poles. The poles weigh about 8,000 pounds. In order to get these there, it requires 3 large trucks, 1 semi-trailer to transport the pole, a second big truck with a large drill on the back of it. It's the same technology that when you're building a high rise, when you need to plant the pilings into the ground, it's the same machine. And then a third crane to set the pole into the ground, and then it's set in concrete. So pole's not going anywhere. A normal sized human being can't wrap their arms around the base of it. It's, you hit it with the car is going to get damaged, not the pole. The anemometer instrument itself and they're generally up at what's called the Safer-Simpson meteorological observation height, which is 10 meters. That's a meteorological constant. The instrument itself is rated up to 224 miles per hour. There's no such thing, but if there was, that would be a Category 7 hurricane. It's solar with a 10-day battery backup, relies on no ground-based power. The data is communicated up through the cellular network. It's also securely captured at the anemometer on a flash drive. So the transparency around it is our central tenet of the way New Paradigm structures our parametric contracts. And it's a true differentiator in that, both the buyer and the seller of protection can log into the same website during the same storm, and they know pretty much in real time, subject to the cellular network being functional at that time, what the wind speeds are and what the recovery levels are in almost real time. The transparency really resonates with the folks that we deal with.
And that's really interesting. I mean, people are talking about sensors and IoT and monitoring buildings, but really, I mean, you were doing that right back from the beginning. You've created the data, you can share it between both parties, and you're deploying it. And so how many of those have you got now installed across the, I guess it's what, the US eastern coast or southern eastern states?
Yeah, we're approaching 100 in the United States. They start, in Corpus Christi, Texas, wrap around the Gulf Coast, 41 in Florida, straight up the Atlantic into Massachusetts. We've also built out the Yucatan Peninsula in Mexico with 5 down there, and we are in the process of building out the Caribbean and other areas as needed.
And that's presumably also, I mean, when you started, I think I'm correct, you had to basically deploy those where your clients were, but now presumably you've got enough of a grid, do you, that you can sort of measure it for a property virtually anywhere?
The network was cited, at least the initial part of it was cited a lot with a lot of input from RMS to correlate with insured values, the coastal insured values, as well as the stochastic event set of tracks that could potentially impact certain areas to get the data. And then we've expanded the network around, just individual opportunities or areas where there's demand, where there wasn't good coverage.
And then on the distribution side, I mean, one of the challenges I've heard elsewhere when people are looking at selling parametric products is the brokers don't always understand them, or the agents, or they're too complicated. I mean, what's it been like for you selling that? Have you got people now that are educated in what you're doing and looking for opportunities for you?
More and more, and with the benefit of hindsight, if you would have asked me 8+ years ago to identify what I would forecast as our biggest challenges in growing the space, being a former insurance producer, I never would have picked having insurance agents and brokers that want to sell more insurance to their clients. But that was a really big challenge to get the broker community to really even pay attention prior to 2017. And then we noticed a pretty significant change in 2017 in that you had, Harvey, Irma, and Maria, and, things are in recent memory, and just some of the limitations around traditional insurance, both with what's covered and not covered, and then the claims process, which can be very frustrating to policyholders. That led to a significant increase in demand that's continued to grow at a pretty significant clip every year since then.
Yeah, no, it's another big driver, isn't it, of innovation. I always say, innovation sort of happens after something else happens. It rarely happens in a vacuum. And so have you seen, is there more of a driver in the areas where hurricanes have happened and people either through rates or just because they're more aware of it and they tend to come to you?
It's human nature. A lot of people go through life driving through the rearview mirror. And then as human beings, we are naturally programmed to have what we term a recency bias. So if something hasn't happened in a while, it's out of sight, out of mind. And also an optimism bias where, it's probably not going to happen. The conversations that we have with both buyers and brokers in areas that have been recently impacted by a large hurricane or significant earthquake are very different conversations than we're having in areas that have not been impacted by that in recent memory.
And what about the pricing? I mean, you mentioned RMS, and I know you work with other models, but do you use that as part of the way when you're pricing the triggers? Do you take into account the modeled analysis as well?
Well, we use the hazard event set. So there's really, at its most basic level, the models have really 2 inputs. You have, the event set, which are the hazard probability. So what's the probability of wind speeds at this location exceeding a certain amount in any given year? And then the second input with modeling is, okay, how is my portfolio or my risk going to perform in event A through, triple Z? And that produces the damageability output. With Parametric, we don't care about the damageability. It's about the hazard. So we price, and our capital partners come up with a view on risk and price based upon the hazard frequency and the hazard severity.
Yeah, and that point you made there about damage is another important feature of Parametric, which is less asymmetric risk because both parties have essentially got the same information about the hazard. They don't need to know what the state of the building is or predict what a policyholder is going to be doing to their building. It's just simply done on the likelihood of the event occurring.
Correct. So it makes it attractive for both sides.
And then what about from a regulatory point of view? Because different states or different insurance commissioners have got, I think, different views on parametric insurance. I mean, you must have solved that problem now in terms of this not being seen as gambling and being a credible insurance offering.
It is. So a few things. One, we operate generally as a non-admitted product. And two, it's insurance. The index triggers it, so the parameters trigger it, and the insured needs to have economic loss, and they need to attest to having that economic loss by signing and having sworn a proof of loss. So it's very much insurance. You cannot profit from insurance.
Good. And then just on the MGA side, can you talk about who's providing your capacity and the balance between US and Europe?
It's a growing panel of both domestic, Bermudian, and European capacity. There's a fair amount of ILS that ultimately bears a lot of it, but it's, there's balance sheets, so there's large insurance companies that the insurance policyholder is going to be facing, and it's a growing panel.
Yeah, well, it's certainly a increasingly attractive marketplace, as you said. And then you touched on claims, but I know you've had some claims experience. You've been around long enough. You've had hurricanes coming through. Can you just talk about examples of where the claims experience has been better for the policyholder based on where you've structured the coverage?
One of our insurance company clients last year in Sally had a recovery in a matter of days following Sally's impact on the coast. Maria in Puerto Rico. We had a financial institution client or a policyholder there, and they were paid in full 13 days post landfall. So there was no electricity in Puerto Rico at the time. We had to wire money to their Florida office. But, when the event happens and when the triggers work and the contracts work as designed, and the insured knows almost in real time, what's coming to them and how quickly, it's an awful experience, but it's an opportunity, and it's some of our best marketing are the policyholders that have had the product work correctly.
And what about basis risk? The fact that the actual payout may be different than the loss. I mean, it sounds like it's a top-up cover, so maybe less of an issue than if people were relying on it solely for insurance. But is that either a barrier in selling it, or is it an issue when it comes to claims payment?
Well, you bring up a great point, and I want to unpack that a little bit. So basis risk exists, and the definition of basis risk is just a difference between, as you mentioned, the loss and what's triggered. There's also a different form of basis risk in traditional insurance, and that's everything that's not covered in the contract, whether it's deductibles or whether it's an exposure not insured, or whether it's the claims process, which could be a long drawn out negotiation that could take a year or two or more. So that's basis risk in traditional. The basis risk in parametric is if the policyholder has loss, the amount of loss doesn't trigger, or the loss is much greater than they anticipate in a weaker event. And what we do at New Paradigm, in our mantra on this really, is to make sure that we're designing the correct product with the appropriate triggers for the insured. Some of the levers that we have that can impact pricing are where the cover attaches from a wind speed severity standpoint, where it exhausts, and that impacts the rate that the insured pays.
Okay, for those of you not familiar with insurance, what Evan is talking about here is the terms of the insurance policy, and in this case, specifically, what is known as the insurance layer. This is where the cover attaches. Well, what that normally means is that the actual loss amount suffered by the policyholder above which the insurance would pay out. Now, for parametric insurance, it's slightly different. So for hurricane, that would be the wind speed at which needs to be reached to trigger a payout. So it could, for example, be 100 miles per hour. And then Evan also refers to when the cover exhausts, and that refers to the point at which no more payout is made, maybe 120 miles per hour for parametric insurance. This is also known as the limit, as you will hear in a few minutes.
The lower the rate, the more attractive that looks to the insured. It's easier for the broker to sell it, but is that product really going to be responsive to the needs of the purchaser? So we're in daily conversations with buyers, potential buyers, and their advisors around not focusing so much on rate, but get the right product, maybe buy less limit, but get a product that's going to be responsive to your needs in multiple claims events.
You started off in hurricane, but I know you're offering earthquake. You've got a product called, I think, Shake and Pay. Is that right?
You shake, we pay.
And what about the triggers for that? I'm guessing you're kind of using the USGS or other publicly available data for that one.
So unlike with hurricane, with earthquake, there's a lot more data around. So yes, we use USGS and we use shake intensity in regions. So there's more of a correlation between damage and economic loss between the shaking, which is the energy of the earthquake, versus the magnitude, which is just the size and the location. So we use a shake intensity basis for shake and pay.
And we talked a bit about your customers, but what's the sort of smallest type of transaction you do? Are you offering, for example, to homeowners for either hurricane or earthquake, or is it more businesses?
It's more businesses, but we do have homeowners that we insure.
And then what about the community of people in parametric insurance? I noticed I've actually joined it virtually. You did an excellent conference last year, and Gloria worked very hard to pull that together. But what is the community like? Are you sort of sharing ideas with people out there, or is it still tend to be somewhat sort of independent people going out about their own roles?
Well, I mean, it's both. I view it as a responsibility to be responsible and make sure that we're designing appropriate products and not targeting too low of a rate for things that if the hurricane comes and a lot of contracts are expected to trigger and they don't, that's not in anyone's interest. It's a growing competitive field. There's more and more people getting into it, both that you could see with direct channels, and then there's other people that are coming in on a purely blind reinsurance basis that are providing capacity to the space.
Yeah, and it certainly seems it's at the stage where there's enough for everybody out there, and partly, as we talked about earlier, it's educating the brokers so they're able to go and sell it and you cross a broader broker network. So Evan, what about anybody listening who thinks this is great? I want to go and explore this as a cover from New Paradigm. How do people find out the brokers or the agents they can use to find their cover, or they might want to be there as a capacity? There's 2 questions in there, but what's the best way to get to know more about you?
You can just ring us. We have the website, and we're very searchable online. But we have a growing group of brokers, producers, and advisors that are familiar with our products and are able to answer questions. Most of the large global insurance brokers we have extensive trading relationships with. In the U.S., we have many direct retail relationships. We also have robust wholesale relationships with some of the leading wholesalers. So, the products are available for those that, that want to access them.
It's a great success story. What's your view about non-hazard non-hazard related parametrics? Do you see some things evolving in that area? I mean, you talked a bit before about non-damage business interruption, but what are your thoughts about those as sort of way of solving some of the other sort of intangible type assets?
The real central tenets for parametric, you need to have robust data that goes back, as long as possible. And then you need to have with that data, you have the ability to come up with probabilities of certain events occurring or not occurring. And that's how you can price things. And you just need the independent data. And that's really all that's required. I mean, there's weather covers that have been around for a long time based upon, excess precipitation or drought levels or freeze levels. So if it can be independently measured and there's enough data there, it can be done.
Okay, but what about, say, cyber, for example? I mean, there's people looking at doing cyber parametric covers, a few out there, but do you see that as being sort of mainstream, or is it just the data too hard to get, or not enough history behind that?
Cyber's a challenging one. And it's very similar as well as pandemic, because The cyber cover, it's not like by definition, the hurricane is not going to impact the entire U.S. coastline. It's going to impact just a small area or region. So, with cyber, it's something that could potentially, do what COVID did, where if it's a big enough, cyber attack, it could take down everything at the same time. So that's what makes it, a challenging peril.
Yeah, your sort of lack of correlation is the sort of classic way insurers survive. And if you can't demonstrate you've got good correlation, then it's very hard to do it. But I'm sure you've had people knocking on your door, helping solve that problem as well. I think if anyone can figure out how to create a pandemic parametric product, there's going to be a lot of interest in that. But as you say, you've got to be quite confident you can constrain it. And by definition of pandemic, it's global anyway. So it's kind of, it almost shouldn't exist by definition, I'm guessing. Well, good. I've asked you a lot of questions. Is there anything we haven't covered that you think is important to talk about?
Yeah, well, the other side, we've been focusing a lot on the benefits to the policyholder for offering risk transfer for things that are not covered by their traditional insurance and giving them a rapid infusion of liquidity. The macroeconomic term for that is the global natural disaster protection gap, and that's measured, into the trillions of dollars of exposure that's not coming into the insurance market. The insurance and reinsurance industry covers about 1/3 of the total economic losses for each disaster. In the New York area, in the Northeast, America is one of the most heavily insurance penetrated countries in the world. Superstorm Sandy impacted that several years ago, that area. Total insured losses, including the National Flood Insurance Program, were pegged at around $22-23 billion. Total economic losses were pegged by independent third parties at north of $70 billion. So, that's pretty consistent with every event. And it's a great opportunity. And when we're talking, we focus a lot on the protection buyers, but some of the benefits of Parametric to the protection sellers are, one, upfront and then almost in real time what your worst loss is. And two, we're expanding the pool of what's insurable, so bringing more risk in, more opportunity to deploy capital. But with Parametric, and what resonates really well is the risk sellers are not going to get surprises. They're not getting adverse loss developments from 4 years ago. There's not that reserving challenge. Almost immediately what the worst loss is going to be. And then with the insurance-linked securities investor side, it really solves for the trapped collateral problem that's been causing some challenges there.
This issue of trapped collateral has been a problem with the catastrophe bond or cat bond market, also known as ILS or insurance-linked securities, where there have been bonds triggered by more traditional insurance losses due to financial loss, or indemnities it's called. And these can take months, sometimes even years, to determine if the catastrophe bond has actually been triggered, because it takes that long to settle the loss. Now, during this time, the investor's capital can't be reused elsewhere, and it also causes problems for the fund manager trying to value their fund. They don't know exactly how those bonds are going to perform. This is what happened during the wildfires, hurricanes and typhoons in 2017 and 2008 when some cat bonds were triggered. As Evan says, parametric triggers don't usually have this problem, or at least not if the trigger has been well designed.
So, the opportunity to deploy on Parametric is very attractive to protection sellers as well as the buyers.
I guess part of the challenge, though, with that protection gap is you've got people who don't necessarily understand or have confidence in Parametric, or even maybe they're just not allowed to buy insurance that way. I mean, a lot of that gap, I think, is government. Of course, as you go into the developing world, you got much even bigger challenges. Do you see that? We talked about the brokers, but do you see that education expanding into some of the other buyers out there and people one step further removed from the insurance buying process?
Yeah, no, I'm glad you brought that up. And, folks like yourself and your organization and, generating more and more awareness. Since, I founded New Paradigm with my partner a little over 8 years ago, we've been on a, 8-year educational roadshow. And, now more and more people are learning about it. It's just the pace is accelerating rapidly. We decided a year ago that it was time for a conference dedicated solely to Parametric. So we were able to curate, some incredible content. We had, some really powerful speakers, people in the industry representing, the biggest brokers, the biggest reinsurers, the modeling companies. We had a panel on the buyer's perspective. So it's great content. And one of the I don't want to say the benefits of this lockdown virtual world that we were in, but it was done virtually. So the content is there, and we were able to open it up to a very broad audience, a lot broader than people that would have been able to travel to Miami in April.
Yeah, you did a nice job of sort of chopping that up as well, so people can see bits of it. So what's going to happen this year? Are you going to try and do it virtually again, try and do it for real, or too early to commit?
Too early to commit, but we're going to explore doing a hybrid approach where some of the people that may be comfortable traveling and are able to, but we're kind of in a wait and see. We're targeting towards the end of the year again for it, and we'll see how things develop.
Well, you set a high standard for yourselves to live up to, so maybe some shortcuts, but you did a really good job. I mean, we saw a similar effect. We did our parametric insurance report, which of course we covered you in. You had a lot of interest on that, and actually also what's intriguing about, I'm sure you found the same thing when you do these events and reports. It's the people that you didn't know about that then sort of turn up and say, well, we should have been invited to that or been covered. So it's still quite a nice size of community out there. And again, you don't need to answer this question, but I don't want to put you on the spot. But are there any other companies when you look out there as sort of partner companies or other people doing parametrics that you like the look of?
There's a couple of other MGAs that are in the space and doing a good job. We trade with a couple of them. And then we're seeing more carriers that are getting in the space and developing those capabilities. Some are doing it on a direct basis. And then others are choosing to partner with MGAs such as ourselves that are in the parametric space with us. And there's more and more household names that you may not think of as a parametric provider that are now in the market in the parametric space.
Yeah, I mean, the MGA model is a great way for them to test the concept, isn't it? And you've got the expertise, you've got the distribution to the brokers. At some point, who knows where it might end up if they like what they see. But it's a really interesting angle of innovation that for some of the big carriers.
With parametric, it all gets down to the trigger and how the trigger works and making sure that's there. The data and the technology is it's been very powerful for New Paradigm.
Yeah, and those of us have been around for a while, see how these things play out. There's a reason for why you got to get that right, particularly things that might look simple like hurricanes are not always that simple when they can occur, and there's a tough way to learn when they don't quite perform. But I think the way you've done it is fantastic, building out the wind speed recorders. Well, Evan, listen, that was tremendous, and thank you very much for your support for what we're doing at InsTech. Really appreciate that. We've now got our summer party confirmed for the end of July. So if you fancy a trip over to the UK, love to see you over here.
Before the pandemic, several times a year, I'd be over there, and I definitely miss traveling.
Yeah, well, if not July, we'll hopefully we'll see you maybe later in the year. I think it looks like certainly from our end things are opening up. It sounds like the US is making good progress. So hopefully we're getting through this, and might even start to do some of these things face to face for real face to face, not digital face to face in a few months' time.
That would be nice.
Excellent. Well, we'll hopefully do catch up again soon, and looks forward to seeing how things develop over the course of the year, and of course the course of the hurricane season just around the corner.
Yes.
Thanks, Evan.
Cheers.
It is such an honor to speak to so many founders of such great companies. And what's more, almost everyone you hear on our 138 podcasts is also supporting us at InsTech London. And we are active around the world these days, but I'm sure you'll be glad to know that we are lining up our physical events again for the rest of the year. First up will be our members party this summer in late July. If you're not yet a member, want to come along and want to know how you can help us or help you, please do contact me, Matthew Grant, on LinkedIn or hello@instech.london.